Hey traders, welcome back to this week's weekly Forex Forecast. Last week was another profitable week in the books with GMT members in the real-time setups, and we've seen markets actually getting quite volatile. So coming into this week, in terms of euro dollar, do I want to be long euro dollar, short euro dollar? Well, the first thing to notice is look at how flat this market is. You can see the moving average is just going sideways. And we have a neutral market here in the euro-US dollar pair. What does that mean, or why is that the case? Well, the reason that's the case is because both the euro and the US dollar are relatively outperforming to the upside. So actually going into this week, euro dollar is not one of the best opportunities, although I am prepared to trade it, and it would be from this high up here. But what you'll see is when we go through the portfolio selection process, I'm looking to preferably be long both euro pairs and also US dollar pairs going into this week. So when you get two strong currencies, the market just kind of moves sideways. And if you get two weak currencies, you tend to see the market ranging and correcting. You get a strong and a weak, it goes up. You get a weak and a strong, it goes down. So on balance, because of what we've discussed in previous videos, I do think we are most likely coming down to this low. We are still making lower lows and lower highs. And so, I don't expect too much out of this pair next week. If we can take out this high over here, this would be going into this week where I would be interested in an opportunity. So in a pair which is neutral and moving sideways, I don't really want to try and trade it intra-week. Because the problem with kind of choppy neutral markets is, imagine, from this day to this day, if you're trying to trade intra-week breakouts in this market. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You're looking at almost a month, if not a month, of real kind of false breakouts either way. So when the market's super choppy and both of the currencies are relatively performing at a similar metric, then you really want to be focused on range trading it, not trying to breakout trade it. And that's why portfolio selection is so important. You get a strong and a weak currency, you can breakout trade, you get neutral market, you want to be range trading it. So you actually need different strategies for different market conditions. So if we do get the market pushing back, although this is not a kind of sell the rip opportunity, in a weak versus strong market, which is going down, we're looking to sell rips at the upper bound. And in a strong market where we have strong and weak, we're looking to buy dips from the lower bound. And a neutral market, we can range trade. So if euro dollar gets above the 1.17283 and we take out this high, I'm going to be looking for a short for 1 or 2 days back inside, maybe back down to the moving average. So the reason being is that, we're making the statement that any traders trying to attempt next week to break euro dollar above this high, they're most likely going to fail because in terms of portfolio selection, this is not a strong market. So range trading, becomes the preference above this area rather than a breakout trade. So that's what I'm going to be specifically looking for next week. If we do pull back and we enter the sell zone, which is between these two levels, that's where we turn overbought during the week. This is where we turn oversold during the week. So if we can turn overbought during the week in a market that's ranging and doesn't actually, unless you get a catalyst coming out, doesn't really have any reason to break out in one direction or another, then this is the opportunity I'm going to be looking at, not just for myself, but also in real time with GMT members next week above the 1.17283. That's what I see in euro dollar. Going into next week, I actually want to be long both the euro and the dollar versus other currencies. Okay, so moving on to the portfolio selection, you can see coming into this week, kind of left it last week, but the Swiss franc is back in the top spot. So I do want to be looking at Swiss franc longs as a preference going into this week. I also want to be looking at the euro to the upside and the US dollar to the upside. So again, this is where we get euro dollar as a pair. Both of these currencies are quite strong. And what's euro dollar doing? Nothing. It's just moving sideways. It's chopping around. So if you want to trade euro dollar, range trading is a good policy. If you try and breakout trade it next week, the chances are, this could go on for a month, and you could struggle with breakout trades into a week in a market where you've got two strong currencies. And the same with New Zealand yen. New Zealand yen as a currency pair, you've got two weak markets, most likely is going to chop around. It's going to move up and then it's going to come down, and it's going to move up, it's going to come down because they're both weak, unless or until one of those changes. So those are the three currencies to the long side that I'm going to be preferencing coming into this week. To the short side, again, it's quite clear because, we have three currencies which are outperforming absolutely on an absolute basis, and we're also seeing increased momentum in their performance. And at the same time, to the downside, we have the same thing. We have 3, which are, in absolute terms, red and also getting weaker. So the pound and the Aussie next week, I'm going to leave those 2 currencies, but you could also look at pound dollar to the downside as a bias. Now that doesn't mean pound dollar has to drop on Monday. Pound dollar might bounce on Monday, but then that's the opportunity to short. So pound dollar to the downside, euro pound to the upside, and pound franc to the downside you could also look at, but preference next week is going to be for franc yen to the upside. Going to be looking at euro yen to the upside, US dollar yen to the upside in today's video. We're also going to be looking at New Zealand franc to the downside. We're going to be looking at Euro New Zealand to the upside and New Zealand dollar to the downside. And we're also going to be looking at CAD franc to the downside, EurCad to the upside, and US dollar CAD to the upside next week. Those are the pairs that are at the top of my watch list, and those are the markets that we're also going to be covering in today's video. Okay, so kicking off the watch list as always with crude oil. Now, crude oil really isn't doing too much. It hasn't really done anything for a while. It's kind of been consolidating. And you can see the weekly range. This is where it turns overbought. This is where it turns oversold. It's really struggled to get, to its upper bound or its lower bound. And it really means this market's kind of not in play. It's just really kind of consolidating. So I'd like to see this moving. I'd like to see this come out of this kind of range first, because this may just continue to chop. I'd like to see this really break higher and this turn into a bit of a bull flag, because on balance, crude oil is still a short. So I would like to see it push higher, entering to the sell zone at the 63.38. Once we cross that level, we are in the sell zone. This is where the odds of the market pausing or reversing in the week greatly increased to about 68%. It's about 68% expectancy. If you add in portfolio selection, it actually goes up. But this is where I'll be looking for a potential short opportunity. Now, the other thing with crude oil next week, which is why it's not really a superb setup, is that if you look over to the left-hand side, we don't really get a nice Kiev resistance, which in the past pushed price down. That's what I'm primarily looking for. You can have prior support turning resistance, and that's okay. But as a resistance area, you really want to be identifying as a preference resistance areas which push price down in the past. So yes, you can use resistance areas which were previously support, but the best resistance areas are the ones which previously drove price down, not drove price higher. So when I'm looking for that over here, I don't see that. There's nothing but air really between this high and this high. So when that happens, what I like to see is I like to see the market forming its own resistance like this. So the market comes up, maybe we push higher, it pulls back, and now you've got this kind of double top almost. Pulls back, now you've got a resistance level in the sell zone which has just been created, and then it breaks, and that's where you can look for that failed breakout. That's where you can get your double top pattern. So that's what I'm going to be looking at in real time with GMT members next week if we can get above the 63.38. Otherwise, I don't think crude oil is one of the best markets. I think there are better markets to trade next week. Okay, so kicking off the Forex universe with franc yen. Now, I can only be a buyer of franc yen next week. I cannot sell this market under any circumstances. I'm looking for 2 things, a deep pullback or a shallow pullback. So the way to look at that, and again, you're going to be reactive. You don't really want to try and predict it, because it's impossible to predict really if a market's going to correct, with a small correction or a big correction. It's difficult to say. What I'd like to see is I'd like to see franc yen pulling back, breaking below the moving average, and coming all the way back down. And this is where we get that stair step. So in this case, we do have prior resistance turning support. It would also be good if we had some support levels turning support again under here, but this prior high over here, which we tested and failed, and then we got the break clean through. This sits right at the buy zone next week. So if we trade into this level, not only are we stair stepping the prior high, we're also doing that in an area where the market turns oversold. So that's going to be a great place next week to look for a 1 or 2 day reversal to the upside. And the other thing is if we start to make our way back, so of course that would be a deep pullback. We come all the way back down to oversold levels. But if we start to pull back and instead of coming all the way down here, we re-break, the moving average will follow it. And this is where you get your bull flag set up into the profit taking zone next week at the 196.60. I can either be a buyer of this market or do nothing. I cannot sell this market next week. Okay, so moving on to New Zealand franc. This market is a short or do nothing for me next week. I cannot buy this market. It's nicely trending lower. This is, you can see, as we start to break above the moving average, we can look for the lower high. So ideally, I'd like to see this pull back and trade above the moving average, we have a really nice key of resistance in the past at the 0.45599, which sits just inside the sell zone next week. So not only do we turn overbought, which means that we should be looking in this area for potential shorts, but we're also doing it right into an area of resistance which pushed price lower in the past. So I really like this next week. I'm going to be looking for a failed breakout above this high, making the statement that those who are buying and attempting to break out to the upside here are on balance most likely going to fail. And as they pull their positions, they get liquidated or stopped out, you see this big kind of sell-off back inside the range. That's what I'm going to be looking to take advantage of next week. And that is the setup that we're looking at every single week, day in, day out with GMT members in real time. So this is not theory, this is very practical in terms of its application. What I would also like to see next week is if we start to break up above the moving average, because this is a weak currency and a strong currency, you can look for that kind of intra-week breakout. So perhaps the moving average turns up. And again, the moving average is really just a kind of dynamic, trend line here, essentially. It moves up, you could draw, you get this kind of price action with lows and highs as it does that, and you can draw your counter trend line on. But essentially it pushes towards the upper bound, and it's so weak that it doesn't get there, it re-breaks. That's what sets up that kind of intra-week breakout setup. You get a bear flag down to the prior low, which sits just inside the buy zone. So a great profit taking target is the prior low. And of course the moving average follows it around like this, and that first kind of pullback, you see it sells off, breaks, pulls back, there's your bear flag setup. Breaks, pulls back, bear flag setup. Trending up, breaks, pulls back into the moving average, sells off, into the moving average, sells off, and then starts to correct again. So that's what I'll be looking for next week. I would primarily like to get this failed breakout above the 0.45599. That's the preference next week in terms of shorting New Zealand franc. And the final franc pair is CAD franc. I can either short this market or do nothing. We did have a nice sell-off last week, and we also have a prior low sitting just inside the buy zone, or a profit-taking zone for me, because I can only be short. So what I'd like to see is, this is a great target for any intra-week breakout, but I'd like to see this pull back. The first prior high in the 4-hour chart is right here inside the sell zone. So if we can push into the sell zone and take out this high, this is where I'll be looking for a false break higher next week. You get that liquidation. That's where you can get paid for 1 or 2 days to the downside. If we start to pull back, we break the moving average, and instead of testing the upper bound, you get a re-break. So again, you get that kind of bear flag breakout. There's a good example. Pushes down, consolidates, and then you get your next leg down. Then you can look for that kind of intra-week breakout setup if that's your thing. Down to not just the prior low here, but you could target the prior low over here, which sits inside the profit-taking zone next week at 0.55987. Okay, so moving on to the euro pairs, started with euro yen. This is either a buy or do nothing for me next week. And what I'd like to see is, I'd like to see it breaking back down below the moving average, because once it does that, we know it's in more of a correction. And I'd like to see it coming towards the bottom of this channel. Now, there is a nice prior low just here in the 4-hour chart. This low previously came down. This price point, this exact price point at the low, drove price after it fell back to new highs. So I'd like to look at the 177.73 next week. It sits right at the buy zone. And if we breach this, we're going to turn oversold during the week in a market I'm looking to buy the dip. And at the same time, we could, if it kind of goes sideways, we could actually see it hit the bottom of the channel here. So this is where I'm going to be looking for a 1 or 2 day reversal back inside the range. Usually, if you get a test of the upper bound, it doesn't come back to more than halfway of the range. And if you get a test of the lower bound, it doesn't come back to more halfway of the range. Sometimes if markets are super volatile, I've seen, it take out one range and the other one within a week, but it's very, very rare. So I would be looking for a 1 or 2 day bounce, towards the kind of middle of the range. It may just be 1 day, especially some of these markets, they come down and you get, 1 day's worth of bounce. And if you don't book your profits, it can kind of be flat or even go back down to the lows next day. So I'm only looking to capture as an objective 1 to 2 days worth of movement. If I can capture that, I'm not too bothered about if it goes a little bit higher or not. I just want to take that out the market. That's really what we're doing, kind of every single day. So that's what I'll be looking for next week in euro yen. You can also look if it breaks down below the moving average and then you get the re-break. So it breaks down and then you get the breakout, and look at this pullback and rally away. Pulls back, breaks out the moving average follows it. Notice how it breaks out and the moving average starts to turn. That's when you can get your bull flag set up towards the top of the channel and the profit taking zone next week, which is at the 181.31. Either way, I can only buy this market next week. I cannot short this market. Next is Euro New Zealand. Again, I can either buy this market or do nothing next week. You can see we are channeling to the upside. And in fact, the last 2 times we hit the top of the channel, we actually sold off. So I would like to see this come back. This needs to really pull back first. I'd like to see this pull back. And there is a prior low in the 4 hours here. And there's a prior high as a stair step right there. So you can see the buy zone next week actually kind of straddles, or rather is straddled by this Kiev resistance and this Kiev support. So ideally, I'd like to buy the dip in this. I'd like to see this come down, trade into this level here. So between the 2.0247 and the 2.0232. And this is where I'll be looking for sellers to get trapped. And I'll be looking for a 1 or 2 day bounce to the upside. If you are going to trade this intra-week, you kind of want to see it pull back, a little bit more because it's quite close to the top of the channel. So if it does pull back and instead of getting here, re-breaks, he attempted to do it here, but I think because the channel was so close, people booked profits and it kind of sold off. But if you get the re-break, you can look for the bull flag setup. And if you do get that next week, you can see the channel, the ascending part of this channel to the upside. You can see that this is sitting and intersects the profit taking zone next week. So that would be a great place for any intra-week breakout or bull flag setups next week. There's a nice bull flag setup. That would be a great place for any profit taken in Euro New Zealand to the upside next week. The profit taking zone starts at 2.0654. And the final euro pair is EurCad. Now you can see EurCad is actually making higher highs and higher lows. It doesn't mean that it can't come down into the buy zone. And if it does, I mean, this is almost kind of ranging between these levels here. If it does come down into the buy zone, I will still be prepared to buy this on the dip, buy this kind of, bottom of the range almost here recently. But you can see it is currently making higher highs and higher lows. So the first thing you can look for next week is if you start to break down below the moving average into the bottom of the kind of channel, you could take this and you could attach it to these highs up here. This would set up your counter trend move where you can look for the break. The moving average will follow it like this, pull back, and you can look for that bull flag setup into the top of the range and the profit taking zone at the 1.64102. And usually, within a week in the 4 hour chart, you might only get one decent bull flag. If you drop down to the 1 hours, you might get more. And if you drop down 50 minutes, you get even more, etc., etc. But they're not as reliable. So you get more opportunities on lower time frames, but they're less reliable. But in the 4 hours, one solid bull flag setup in a week is pretty much, what you'll get. You get maybe 1 or 2 days up, 3 days up and a pause. And then you might get 1 or 2 days up, within a week. So that's the bull flag setup you could look for on a counter trend breakout. If it breaks this though and starts to make its way down to here, there's a low here and there is a nice support level over here at the 1.61448. So this is where I'd be looking if we did break through. So if we pull back, we test this, and instead of breaking out this way, you break down this way. This is where I'd be looking to buy the dip next week in EurCad. It's where we turn overbought and we start to run in support that pushed price higher in the past. This is where I'd be looking for that 1 or 2 day bounce. May even come back and test the underside of the trend line, but that's the opportunity on the buy the dip I'd look for next week in EurCad. Okay, so wrapping up with the US dollar pairs before we move on to gold and silver, you can see US dollar yen is kind of flattening out a little bit here. It's almost going into a bit of a range. If it fails at this high, this would take us back down to this low and most likely into the buy zone next week. Now, there isn't really, I mean, this is a support area here, but it's quite deep, almost halfway. This is the prior resistance area, which held and then broke, turned support once and held. So this would be the 152.37. This would be the support level in the buy zone next week. I'd be interested in looking for a failed breakout below and for a bounce to the upside from this support level. You can also, look for the intra-week breakout here. Pulls back, maybe, it kind of breaks here. But the problem is this is kind of flat. This is not really doing this like we saw in the other, markets where it breaks above and it continues the trend. It's kind of almost ranging. So I would definitely rather this. However, if you start to pull back and you get a strong break, you notice how this is not very strong. It kind of just pushes up and it's almost choppy, kind of tests it and it's holding and then it kind of fails. If you get a strong break with momentum, it should be clear. This is pretty clear. And then look at this tight consolidation. You get this break up, the moving average follows it, then you can look for that bull flag setup into, especially if it clears this top here as well, into the profit taking zone next week at the 156.35. Either way, even though this is my preference next week, either way I can only buy this market, I cannot short it next week. Next is New Zealand dollar. I can either be short or do nothing next week. Again, you can see this is already correcting, so we've already got that kind of pullback above the moving average. So I'd like to see this continue, ideally. So even though I'm looking for short opportunities, I would like to see strength to start the week. I want to see the opposite, because as this pushes up and enters into this area above the 0.57508, it becomes overbought during the week, and the odds of it declining just without anything else are quite high. So if we trade into this sell zone and we take out a prior resistance area, that's where we get that confluence to really help us keep a high win rate. So in this case, you know, the prior resistance area is actually above halfway. It makes it, you know, a little bit less likely to come all the way through. So this would be the resistance area next week, which is sitting first and foremost in the sell zone. It's actually a price support level. So it's support turning resistance. So it's kind of a, you know, it's kind of a B plus form of resistance, but it's good enough. It's better than nothing. And this would be where I'd be looking next week for any kind of double top, failed breakout to the upside, and a pullback for 1 or 2 days in New Zealand dollar. The other thing is, you know, because the New Zealand is very weak, you may find that this is, you know, going to find a lower high somewhere in this area. And you'll know when it has, because it will do this. It will sell off, you know, it will sell off and it will break out of this kind of counter trend line move. In fact, you can already kind of put that on here. You know, something like this. So pushes up, it breaks, and then what you'll find is you get that pullback into the moving average, and that sets up your bear flag down to, in this case, the prior low, because it sits just inside the profit taking zone at the 0.56135. And finally, before we move on to gold and silver, is US dollar CAD. Now, US dollar CAD is kind of in the bigger picture trending higher, but it's kind of loose. It's kind of, you know, rallying up and then big swings down. So ideally, I would like to see this primarily come down into the buy zone, because regardless kind of almost of what's happening in terms of price action here, more or less, not completely, because if it was in a downtrend, then you might want to filter out, you know, buying lows. But as long as the overall kind of trend is to the upside, any kind of sell-off which turns this market oversold is offering a high degree of probability in terms of a bounce next week. So the support level which drove price higher in the past is right here in the 4-hour chart, the 1.3922. This is a little bit too deep down here. This is the perfect level to start to look for a failed breakout to the downside and a nice bounce to the upside. And these levels, many of you will know, these get reset every single weekend. So these are for the week ahead. So some of these charts you can zoom in and it looks like, no, that level is really far. You know, it's impossible to get there in a week. But actually every single range in today's video on these assets is tailored specifically to that asset so that it can actually get there next week. It can easily do that, you know, with a high degree of probability. So although some of these look deceptively far away, these can be easily achieved within a week. So that's what I'll be looking for next week. If we start to break back down, you know, and we get, maybe we fail at this low, right? We come down, we bounce here and we get this kind of A, B, C almost from the top. Then we re-break. That's when you can look for the moving average to follow it, and you can start to look for your bull flag setups into the profit taking zone at 1.41082. You can look for these highs, but these are quite deep. I mean, this is almost halfway into there. So realistically, you know, when it comes to booking profits, it's always quite good to be fairly conservative, just to keep booking profits as much as you can. So anywhere above the 1.41082, let's say the market comes up like this and then hits its own double top here without taking out the high, you know, that would be a great opportunity to book some profits next week in any longs in US dollar CAD. Okay, so wrapping up the video with gold and silver. And last week I was saying that both gold and silver, although it looks like they're probably at or around major tops, silver's kind of almost pushing to new highs, but I still don't think it really breaks through with any real significance in my opinion. We'll see. But I am still bullish on both gold and silver overall, because again, even if we are close to a top and we're going to start to range, which I think is most likely, and that, you know, can happen when you fail at a prior high and then you go into a bigger range, I do think it is still, and I said this last week, it is still a little bit premature to be shorting these markets. And actually last week they both absolutely ripped. So, you know, avoiding shorts in these metals, at least for now, is a good policy. So what I'd like to see is after this kind of rip higher in gold, I still only want to be a buyer or do nothing. I'd ideally like to see it come back and test the bottom of this kind of consolidation. There's a prior low over here. It's not really a range because we're making kind of lower highs. You know, it's not like we came down, we tested this high again over here, and then we come down and then suddenly we're in a range. But if we bounce at this low, we can go into a range, you know, take out this high, etc., etc. So I would like to potentially buy the dip in gold below the 39118. I cannot sell this market next week. This is where I'm going to be looking at this price support level, which push price higher. This is where I'm going to be looking for one or two reversal to the upside. And because we've kind of broken out of here, you can see there's almost this kind of inverse head and shoulders here. We broke out of this. If we do start to pull back towards this and we stall out, you can look for the re-break and the bull flag setup as well, back to the prior high, which again sits just inside the profit taking zone at the 4203.51. So ideally, I'm going to look for this. If it breaks back above the moving average, you may get that bull flag opportunity. But aside from that, I can only be a buyer of this market. I cannot short gold next week. And finally, we have silver. Now, very similar to last week, I can only be a buyer of this market. I was saying last week, it's premature to short silver. And this is why, because silver can really rip. You know, it's more volatile than gold. So if you do short silver, yes, you can beta adjust your position size. But, you know, generally speaking, you're going to be on the wrong side of a bigger move than if you short gold and you get it wrong, generally speaking, because silver is more volatile. So what I'd like to see is basically the same setups here that I'd be looking for in gold, which is we're back below the moving average. We actually didn't take out the prior high. So I wouldn't be surprised if we did take out the high, you know, next week, if we do manage to get back above the moving average. So there's two things I'll be looking for. Now we're below here. I'd look for this to continue back down, breach the 48.12. And there are some lows down here, but this is the really significant low. So I would ideally, this is kind of like a daily swing low. So I'd like to see this ideally come all the way down, hit the daily swing low, which is kind of in the middle of the range. You know, you can get to the middle of the range here because silver is super volatile. So I would like to see this trading into the 46.88. This would be where, I mean, you imagine, a move from here all the way down to take out this low. There's a very good chance this low holds. Even if it's going to continue lower, you would expect a bounce and a lower high. Right? You know, even in that scenario. So even if this does continue lower, you should get a bounce around this area if you can get there. If you start to pull back, and again, let's say you bounce here, because this is a breakout level prior, you know, technically. You pull back, let's say you bounce here and you re-break the moving average without taking out the lower bound. That's when, so, you know, any kind of re-break back above the moving average before testing the lower bound, that's when you can look for that fast market bull flag setup into the profit taking zone, you know, anywhere above the 52.98. There is a high here if you want to be conservative, or you could see if you could get it into the major prior high. But I wouldn't try and get any profits, you know, beyond this point next week. I think, you know, there is actually quite a decent risk that even though this is a buy, if you take out the major prior high, you could see a lot of profit taking coming in. You could actually see a bigger sell-off. So that would be the ultimate profit taking target next week, the 54.46, which is the ultimate high in silver. But I can only buy this market next week. I cannot short silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video. And if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.